All right, let's talk about that little piece of plastic in your wallet. You swipe it, you tap it, you use it for pretty much everything. But have you ever stopped to wonder what's actually going on behind the scenes? Today, we're going to pull back the curtain on the massive financial machine that is your credit card and see how they really make money. I mean, think about it. You get that 2% cash back, or those airline miles. It feels amazing, right? Like you're getting free money. But is it really free? That's the big mystery we're going to solve today. And the answer, you'll see, is all about following the money.
To get to the bottom of this, you first have to understand that when you buy something, it's not just a simple transaction between you and the store. Oh no, it's more like a complex dance with a whole cast of characters. Let's meet the 5 key players.
First up, the most obvious player, you, the cardholder. Every time you decide to buy that cup of coffee or those new shoes with your card, you're the one who kicks this whole complicated process into gear.
Next, of course, is the merchant. This is just the business you're buying from. Could be a giant online retailer, could be your local corner store. If they take your card, they're the merchant.
Now, it gets a little more interesting. Player number 3 is your bank. They're called the issuing bank because, well, they're the ones who issued you the card and gave you that line of credit in the first place.
And just like you have a bank, the merchant has one too. This is the acquiring bank. Their main job is pretty simple. They're on the receiving end, processing the payment for the store.
Okay, so we've got you, the store, your bank, and their bank. How do they all talk to each other? That is where our final player comes in, the payment network. You know these names: Visa, MasterCard, American Express. Think of them as the super fast digital highway that connects everybody.
So, let's follow the money. You swipe your card. Instantly, a request zips through that network highway to your bank for a quick check. Once your bank gives the thumbs up, it sends the money to the merchant's bank. But, and this is the most important part, it sends the money minus a small fee. Only then does the merchant get paid, just a little less than the price on the tag.
That small fee we just mentioned, it's not so small when you add it all up. In fact, it's the first huge piece of our puzzle. This is the hidden cost that businesses are paying every single time you use your card.
It has a name, the interchange fee. This is basically a fee the store's bank pays to your bank just for the privilege of accepting your credit card. It's the price of convenience.
And how much are we talking about? Usually it's somewhere between 1.5% to 3% of your total purchase. Now that might sound like pennies, but when you multiply that by billions of transactions a day, it becomes an absolutely massive river of money.
Let's make it real. You go out and spend $100. The store you just shopped at, they don't see that full $100. They might only get $97.50. That missing $2.50 gets split between the banks and the network. Now just imagine that happening on almost every card purchase across the entire globe. But that's only one side of the story. The banks have another revenue stream that's often even more profitable. And this one comes directly from us, the cardholders.
And I'm talking about the APR, the annual percentage rate. You already know what this is. It's the interest that gets slapped onto your balance if you don't pay off the whole thing by the due date. It's literally the cost of borrowing money from the bank, month to month. And these interest rates can be incredibly high. We're often talking 15 to 30%, sometimes even higher. This is the point where credit cards can get really expensive for you, and of course, incredibly lucrative for the bank. And on top of that high interest debt, there's a whole menu of other fees. Pay your bill a day late? That's a fee. Got one of those premium travel cards? You're probably paying a big annual fee. Need to pull cash out from an ATM? That's another fee. Every single one of these just adds to the bank's bottom line. So really, the banks look at their customers in 2 different ways. First, you have the transactors. These are the people who pay their balance in full, on time, every single month. They never pay a penny in interest. Then you have the revolvers. These are the folks who carry a balance over from one month to the next. They're the ones paying those high APRs, and they are by far the most profitable customers for the bank. Okay, so we've seen the money that comes from the merchants and the money that comes from the cardholders. Now we can finally put all the pieces together and solve that rewards mystery we started with. And this chart says it all. The biggest slice of the pie, nearly half of all their revenue, comes from interest charges paid by the revolvers. The next biggest chunk comes from those interchange fees paid by merchants on every single sale. And that last little bit is made up of all those annual fees and other penalties.
So where does your free money come from? It's not magic. Your rewards are paid for directly by 2 groups: merchants paying fees on every transaction, and customers paying high interest on their balances. It's a wild thought, But essentially, the merchants and the revolvers are paying for the transactors' free flights and cashback.
Which leaves us with one final question for you. The next time you get that satisfying little notification on your phone that you've earned 2% cash back, take a second to think about this whole complex system and ask yourself, who's really paying for it?